Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It's 7:31 in the east coast of the U.S. of A. And hey, Robin, how you doing? And 9:31 in Tokyo in the evening. So there's a whole world right there, in between and in here and there and everywhere. So what do we have going on today? As you can see, a little bounce back up, it looks like to me, on the dollar index. It was down to 104.17 yesterday, we saw, and then you can see this big long tail there. And then today they're popping it back up again. Let's put it over here. There's the, let's see, that's the S&P in an intraday. Right there we go. There's the dollar index, and you can see here it has popped back up again after going into the sell. You see over here it's a minus -0.05, so just on the edge of trying to get back into the buy again. We're in that weekly buy there. Interest rates, just when we thought it was to start to turn a little bit, we're not that excited about it, but we just thought that the feeling in the marketplace overall is change is here somewhere. I can feel that. Let's put it that way. Not real. Okay. That is pretty much the nature of the market at this point. Just saw an interesting story on the Bank of Japan, where one of the former Fed governors there said, it's time to change monetary policy. This is not working. And I guess I'm impressed at the fact that their stock index almost fine. That's good. Good. With that, I think I'll have a sip of my tea. Now I'm fine too. Just having that sip of tea. But the Bank of Japan, one of the former Fed governors, talking about the idea that monetary policy has to be reviewed, and they need to do something and change something, is interesting in its own right. I mean, they're one of the only central banks on the planet now paying minus still for the very, very short-term money. And matter of fact, I think we've looked at it before. The interest rate. Let me just go find it again. The interest rate in the short term is like 0.25 minus. So they have to. You have to, when you buy into the Japanese bonds themselves. I don't even know about a Chinese bond market. That would be interesting to see. Too many defaults I've seen. Too many, I guess you could say. But anyway, the Bank of Japan. Let's go find it. Trading, and wasn't thinking I was going to go in this direction, but why not? There it is, Japan. And so the 3-month is a minus 13, 0.13. The 2-year is a minus 0.035, and a 3-year is a minus 0.02. Nobody else let's put it this way, none of the major industrialized nations are doing anything like that. And then when they get to the 5-year, right now it's yielding 0.199. So 0.2%. That's it you get. And when you slide out all the way to the 30-year, it's 1.4. So that does, and I'm going to put it up on the screen there. You can see it, what I was looking at right there. You can see it. It's let's get rid of that. And you can see right there that that's exactly what's going on. Minus, for the first 2 years, is it? 3 years. All the way out to 3 years, a minus. It's interesting to see someone's actually thinking about that in Japan. And I guess when you really think about it hard, you have to take it serious. That can't hold up. Matter of fact, right after that, they showed the business news in Japan, and they showed that like manufacturing is down. Now non-manufacturing is up. It was like about 5-6% on the manufacturing. Probably automobiles and things like that. Machines, TVs, so forth and so on. And then and then non was actually up like 6-7%. So might have been even 8%. And that's probably like agriculture and things like that, things that are growing over there. So they're able to feed themselves with no problem. But the world demand for manufacturing is obviously down. And at the same time, you look over at, well, the whole planet is like that right now. We're all going into that slide for the Federal Reserve to have their recession. They want a recession. They need a recession. They need to slow something down. So that does stand out. Now, where are we at? Okay, so of course we're seeing, and in the same token, I should have showed you the dollar today. Let me do that too. The U.S. instead of just the contract, and we can go look at the contract, but let's just take a look at the U.S. bond market right there. And as you can see there, we're, everything is in a plus. 4.5% for a 1 month. 4.7% for a 3 month. Well, that's a 2 month. I'm sorry. 3 month is 4.8. Goes out. A 4 month is over 5%. So is the 6 month, and so is the 1 year over 5%, as you can see right there. So, Japan is definitely a little further off. You can see, here's UK. This is the British bond market, or Gelts as they call them. And you can see here they're all in the plus. You see the German even lower, but still in the plus. Let's see, and so basically, we're seeing that with the industrialized nations. You can see that increase in interest rates, and they need to do something about it. And so when we go back to the simplistic way of looking at it, like I like to do, you go over and you look at right here. You see the 30-year right there. You see it's still moving down. When this is moving down, interest rates are rising. And we started to get that action yesterday where they tried. You can see at one point there was a little action there, and the day before it was some action. It was trying to bounce. But by the end of the day, they slammed it down. And today it's being pushed down again. And that's why we're seeing the pressure right here on the dollar index. Right there. There we go. That's why we're seeing that little bounce back up again. And at this point, the bond itself, the dollar index, tried to start to roll over. There was an anticipation that we're coming down to the end of the rate increases. Now this morning, I think it was, I looked at it really early this morning, and the consensus is, I do a consensus thing on bond traders and institutions. And now they're thinking 30. Yesterday, I think I told you it was 27%. It's at 33% now, thinking that it's going to be a 0.5 point increase. It keeps on climbing for the next rate increase. Excuse me as I take a sip of my nice hot tea with honey in it. And so that's where we stand. But it was interesting to see the Bank of Japan, a former governor, come up and write editorials and start pressing and putting a legitimate case together that they need to change their monetary policy. As you can see, it's not realistic for them to be at minus. They're just robbing their own future when they do that stuff. It only hurts the world economy, hurts their economy, so forth and so on. All right. From there, let's jump over to the second largest economy in the world, and that is the European Union. And let's check out the euro. And there it is right there. There's the euro. And you see a little weakness here from that interest rate bump we're getting here in the States. Let's put it up on J4X. Right there. There you are. You can see that, it is trying to bump up. We're in a buy for the last couple of days. You can see here with the green. You can see the green line roaring up. Really interesting action there, up into the 46 area. It's halfway up. When you look at the, it has great potential to get much higher up in here. When we look at the euro over here, you see the same situation. It's been 4 days in a buy, and it keeps on pressing, and they made a little high there yesterday, and then rolled over a little bit, but we're in the weekly sell here. That's the problem. It cannot get any real legs on the upside here, and it's had the pressure since basically right here. We've been seeing the fast-moving algorithm underneath. The slow-moving one dropped underneath the manifold, and the pressure has been on, and then they both joined together here, and you can see the second leg of it down. So, alrighty. Starting off on a quiet move today. I don't see... Where's Metho? I don't see Metho out there saying hi. I don't see Timothy coming in from Kenya. Let's jump over to... And I don't see George either. Oh, we got a ding there. Let's see what's going on that. Let's see. Someone's dinging. Ding, 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 ding. Okay. Not there. Maybe. Like that. There we are. Not there. Somewhere someone dinged me. But I'm not seeing who. Oh, yeah, okay, I see it now. Yeah, okay. So, from there, I guess might as well look at the cable. See what the cable's up to this morning. And as you saw, the interest rates with the cable are at least moving up, much more, with the U.S. rates. And that's got to be a positive in its own right. I mean, just for the economy over there. I think they're having vegetable problems. I keep on hearing something about, I guess I don't know. It's so hard to tell because, the news really tries to hide the news. So you don't really get the whole story. But there's a vegetable problem. They need to, I guess they're not growing as much vegetables or importing much vegetables or I don't know, something of that nature. Then, let me answer this text. And future. Let's just answer this question by somebody. There we are. There we go. Ta-ding. All right. So let's put up the cable. Let's see what she looks like this morning. And right there's the cable. You can see 119. I think we were flirting with the 20s. We'll have to go take a look at Timothy's intraday and check that out at the same time. So let's put cable here. And there it is, cable. Yeah, you can see. Okay, so they started knocking it down again. Yesterday they started taking off. They were, it's in a weekly sell here, as you can see. Where's that middle line on the weekly? Right there. Let's raise it up like so. So it's been in that weekly sell since up in here. And matter of fact, what was interesting is both of them joined in. The fast broke down and the slow broke down together. And that, sure enough, that was a few days of punishment on the downside, or for those shorts, a few days of victory. Depending, remember, for every market, there's a buyer and a seller. So, someone could be short, someone can be long, and someone can be flat. All right. And let's see, what else can we say about the cable there? Oh, let's do this. Let's go take a look at the intraday. That's always fun. So, right there. And right there. And there's the 15-minute chart we follow for Timothy. And you can see it broke down in here. There's the sell right there. And it just went sideways. Then we jumped into a buy right here. Is that it right there? Yeah, that's the buy. And it moved up for a little bit. Now we're back in the sell again. You can see that right there. This is the confirming sell. Broke down. The fast broke down there, but the slow had not. That's what the green is. It's the same situation. I keep on hearing dings. I keep on getting dung. Dung, 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 dung. So, What else can we say about any of this at this point? I guess what it really comes down to is that the interest rates here in the States are slowly inching their way up. And as they keep on slowly inching their way up, we see it with the dollar. The dollar just shows more strength, and pairs trades feel the pain. And that's what it really comes down to. They feel the pain. All right. From there, we slide over to... Let's see, not right there, but let's go back to the currencies and the daily currencies, that is. And there is the Swiss. And the Swiss marching, it went into the sell. Was that a green there? Yeah, it was. So it didn't get into the sell yesterday. And today it's lifting back up again. And as you can see here, it's in that weekly buy for a couple of days. And then over here, same thing with the Swiss. Right there. Marching up like we've been doing here, just marching up all the way since back here. We've been marching up and away. And then you can see this thing going on. There's the weekly, of course. And let's see what the weekly looks like over here. Probably the same way. It's probably like 3 or 4 weeks in a weekly buy. Let's see how many greens there are. 4 or 3? I would say 3. Nope, 4. Okay. And I just want to double check something. I guess I should have figured it was 4 because you can see the fast had jumped across 4 weeks ago. And so that would make sense. Let's change that color a little bit more. Like that. And let's fix the format of the lines. That's the answer. The lines. There we are. The lines. So yeah, it's matter of fact, what was interesting is that the slow got across, and the fast did not, and then the fast broke across right here on the 5th week, and then 4 full solid weeks of it across the line. I think we should take like this and make it style. Make it the dashes instead of the dots, so you can see it better. Like that. There we are. And go like this too. We can widen it. Make it a little bit wider for you to see. And move it down. There we are. And you see that action there. Jumping across from here. Trying to get rolling along. And then bam. Bam. It just keeps on rolling on the upside. All right, from there we slide over to the one we started the whole topic about today, and that is the yen. Let's see what they're doing there. The yen is still marching up on a weekly basis. Let's put it up over here. And there's the yen. Same situation, just really pushing up for weeks. Like here, 5 full weeks now it is. Yeah. So in other words, the fast jumped up in this almost 6 weeks back, got into the buy, and just stayed up there. And the slow was in between the manifold here, and got plus, and then fell down a little bit, and then got going again. And now you see it's it's on a hot, aggressive move right there. Just both busting through, and you see that strength marching up from there because of that right there. Right, actually it's right there. The two of them marching along. Once they get past that top manifold, it's like 99.9% of the time it just keeps on climbing. It's amazing how that just ignites it. In the middle of the week, at the end of the week, doesn't matter when. Once they get through, boy, it's got staying power, that's for sure. And then let's put the daily in there. Right there. And you can see the daily, same long march on like it has been here for 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. It just keeps on rolling along. And same situation here. It's like there's 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Just a bunch of weeks on the plus side. And you can see here the slow and fast. Let's get rid of that. Dismiss. You can see. Let's see. We make this bigger like that. You can see here the slow and fast stochastic have been marching, trying to get up and go, 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 go. It just keeps on battling to get going. So, all right. And that is the action we're seeing there. Just pushing up. And we thought it would get into the 36s again, and we have. When we were down in here and we got into this daily buy, and we were in the weekly, I said, maybe 35.5 to 36, and you can see here and they're at 136.79 now. Almost 130, basically heading for the 137. That's getting a little bit stronger than I was expecting. But then when I see this story, from one of the former governors challenging, the whole situation of how they run their monetary policy, it says, that they need to do something. And I would assume, if they raise rates, you're going to see weaker growth, I guess, which is usually the way it plays it. You get weaker growth, but at the same time you get a stronger currency. And so that's really, as we see, we've shown on given times over the last couple of days and weeks where the euro and the cable are lifting against the dollar, and at the same time we watch the Swiss and the yen not. So they're not all joining in together. It's not gaining against the dollar of those two. And so it's, there's obviously something brewing there. We know we've seen where the Swiss and the yen have been working so much more in lockstep. And I'm not even sure which bank there must be a bank or two in Japan having the same issues as Deutsche Bank is in Germany and Citibank in the United States and Swiss Bank in Switzerland. The private banks having their issues, just like we've seen like HSBC and so forth. Santander, and we see Bank of Scotland. They're all underwater. They're definitely not growing the way they used to grow. Because they got crushed in the was it the back in 2008 they got crushed in the debt obligation side of it. They went under like Merrill Lynch did, and Bear Stearns and Lehman Brothers and Wachovia and did I say Merrill Lynch? It's like the pounding that's going on in these private banks and brokerage houses really have knocked out a lot of competition, and at the same time the Federal Reserve now is literally the buyer of last resort. Not only are they the buyer of last resort, which that's what they were a long time ago, now they are buyer every day. Every day they participate in the open market and put pressure, or they're supporting different products. But a lot of these products are like Deutsche Bank and Citibank are only $1 higher, literally $1 higher or $2 higher than where they were in 2008. They're really they've been crushed. They really have been crushed. All right, from the good news in the banking system, we'll drift over to the Turkish lira, and there it is right there, Euro Turkish lira. You see, they started to, with the country's calamity of the natural disasters, the sun, our sun up in the sky has put enormous pressure on some of these countries around the world, especially when they don't build things to what they call scale. In other words, they just put them up relatively cheap, and then the next thing you know, 30 or 40 or 50,000 people are dead from that. Let's have another sip of the tea. Good. So, that's what's going on. We're seeing that And the currency, there was a lot of foreign equity coming into the market, but then now you're starting to see those spikes again. Right here. You see that spike right there? There's that right there. These are not distortions. Let's put it up on here. Let's see. Euro, Turkish lira. You see the same spikes right there. Now, let's see what we can do with this. Okay, so when you go all the way back to here on, what is that, the beginning of February. Let's see, where is it at? Right there, okay. There's the beginning of February. You see these highs, some of these highs have really taken off. Obviously, nowhere's near, as it is exemplified, I guess you could say, off of the Chicago Quant. But, it's doing it again. You can see the height here. And I guess if we turn off the hinky Ashkeys for a second, let's do that. There we go. You see that they're pressing up in the same fashion, spiking way up. In this case here, they actually closed it way up there on it, which is interesting. And then today it is they're selling it back down again a little bit, just like we're doing here. So, this action that we're seeing, they're being relieved of pressure, I guess you could say financial pressure, because of all the equity coming into the country from the earthquakes. And they had back-to-backs. It wasn't like a lot of times you have an earthquake, and then what happens, you have an aftershock, they call it. In this case here, the sun has been firing out CMEs, which is called, a CME is God, I can't think of what it means. Ejection. A corona mass ejection. And it's been hitting the earth, and you've been seeing auroras that are much bigger than normal. I've been showing pictures of that on some places. Another sip of our tea there, and you see that the sun is it's towards its most active period. Every 11 years, the sun goes through a cycle. It's almost like clockwork, where the North Pole actually switches with the South Pole, and so in other words, the North Pole is plus, and then excuse me, on the sun, and then all of a sudden it flips and it goes to the south. And so the positive charge is on the bottom side as we look at it from Earth, on the bottom side of the sun, and the top side goes negative, and then it does it again. Now here on Earth, we look at our North and South Pole, and normally they stay relatively steady for about I guess it's around 12,000 years. And every 12,000 years, ours flips. Whereas on the sun, every 11 years at a flip. And that's fascinating in its own right. And so now the North Pole on Earth is somewhere deep into Siberia at this point. It's moved about 1,500 miles. And it's moving pretty quickly now. It's moving about... excuse me, it's taking a sip of the tea there. So, when you look at these earthquakes and so forth, the sun, basically when a sun fires a CME, which is like a glob of sun that spits out, and you see those little explosions, it looks like a teardrop. Excuse me. When it does that, it has an effect on the earth. It has a big effect. The sun controls 99.9% of our weather, and, the whole bit. So, it hit the Turkey region. In other words, wherever the sun is aimed at that moment in time, it explodes out. It moves at it takes a little more than 8 minutes for the light to hit the Earth, but the protons and the electrons from the sun itself take a few days because they're not moving at the speed of light, and so they're traveling to Earth, and then when the Earth is spinning and it hits the Earth, and wherever it hits, and in this case it hit the Turkey region, and then turned around 2 weeks later and did it again. Now we're at what we call solar. We're moving towards what we refer to as solar maximum from the sun. And there was actual technical analysts in the marketplace that would follow these things because it would have a very strong effect on the markets. It would have a strong effect on everything. Um, so we're seeing we're heading towards solar maximum, which is going to be within the next year and a half to 2 years, and then it's like climbing up a mountain. We haven't reached the peak of solar maximum yet out of that 11-year cycle, and this happens every 11 years consistently, every 11 years, and the sun, when it reaches its peak and then drops back down to, I guess you could call it the zero, going all the way back down over an 11-year period, then the poles actually flip. They go plus to minus and minus to plus on the sun, which is fascinating. And then I guess you could say you can see how slow Earth is, compared to the sun. It takes 12,000 years for ours to do that, and we're now in the last. And people do technical analysis on markets and society's social activities because the effects of the sun have enormous effects on the population on the planet itself. So it's just a fact of life. It's a mathematical fact. It's really odd that it's not talked about as much, but that's why the aurora borealis, or the lights at night, as they call them, you can see more and more of the activity. And if you take a compass, you're going to find that your true north now is about 1,500 to 2,000 miles off from where it used to be, and so forth. And they do adjustments for the satellites and so forth, but the media and the science community doesn't talk about it. I think they try to blame global something. They have a name for it, global cooling or global warming, or I don't know. They invent something, but this is fact. This is identifying fact of math, and so forth and so on. So that's what you're seeing here with Turkey. Turkey is a good example of it. Is that the CMEs hit the Earth and hit Turkey and northern Syria right here on that peak. And then what happened was, this is the currency, so obviously money came rushing into the country buying Turkish lira. And so when you buy Turkish lira, it goes down. Remember, less Turkish lira to buy something. So in other words, it's better off. So depending on the ratio structure, if you're looking the other way around, then it would be going up. So in this case here, as the Turkish lira drops down, it becomes more valuable, which means more money is coming in and buying it. So, and there used to be some actual financial analysts that would follow the activity of the sun. There was I forget a couple of their names, and they would follow this stuff, and they would trade off of it, literally trade off of that activity, and that was very popular until quantitative easing came along. When QE came along, then the power of the marketplace was taken over by the Federal Reserve, and not I guess you could say, the consensus of the population. So in other words, before 2008, you had population, the traders and professionals trading the market. The Federal Reserve would just move their rates around every quarter, or once, every 3 or 4 months. They would do their repos and so forth every so often, if they wanted to sop up extra cash in the system. But overall, it was the participants of the marketplace that were the flow of currencies and stocks and bonds, and then after the collapse of the financial system in 2008, you had from it was a collateralized debt obligations and so forth, and you had those ghost borrowers that borrowed hundreds of millions and billions of dollars, and that's what put Merrill Lynch out of business, and Bear Stearns out of business, and Santander out of business, and Wachovia out of business. At the time, Wachovia was our largest bank in the United States, and Merrill Lynch was our largest brokerage house in the United States. Now they are owned by other entities, paid for pennies on the dollar because they had basically gone under. What happened was Lehman Brothers fought being merged with everybody or anybody, and wanted a big price tag. when in fact they were crushed from the collateralized debt obligation disaster. And so, at the 2008 going to 2009, you had this whole world calamity, but the Federal Reserve came in and started quantitative easing. In the beginning, people didn't believe it. I would talk about it, and people would not believe it. And everybody used to say you're wearing tinfoil on your head and so forth. But here's a perfect example of it, looking at the Turkish lira at the moment. You can see here the Turkish lira is backing off from the, I guess you could call it the solar activity of the sun, and and it, put a punishment into the economy there because of the earthquakes. The earthquakes are generated from the sun. There's actual websites out there that actually can predict where earthquakes are going to basically happen, and when they're going to happen, days ahead of time from the activity of the sun. So that's what this chart is really emphasizing, and it's just a and there were financial guys for years. There were financial guys that used to follow this stuff all the time. You don't really hear about them now because of the Federal Reserve being so involved in the marketplace every day now. It's involved every day, lending billions of dollars overnight so people can hold positions, and so forth and so on. So I think we've had these conversations before. It kind of has that tinfoil type of conversational sound to it nowadays, but then you have to realize that the QE exists, right? Quantitative easing is here, and then they have QT, quantitative tightening. So it's almost like the repo market of old, where they would buy bonds from the banks. Whoop, what did I do? I lost something there. Reconnect. They would buy bonds from the bank. I guess it just shows you that I've been talking too long. And so then what would happen is they would buy the bonds, and that would put cash into the banks in the system, and then they would repo them back, and they would then the banks would instead of issuing bonds, they bought the bonds. They had to sell the bonds back to the Fed, or that's how they got the cash in. And then when they do the reverse of that, they lose cash in their banks. In other words, they sop up the extra cash. And if banks don't have the cash, they can't lend to invest. So that type of thing. And it was a combination, and that's how they kept controls of interest rates since the 1930s. So, anyhow, that's what the Turkish market is really reflecting right now, is activity from the sun. And you can see here, and because of the earthquakes, and then the economic policies that adjust for it. I know that's something rare, but at one time there were technical analysis of that before 2008. There were some of the best technical analysis was following activity of the sun. I know that sounds really weird, following weather. You're following the weather, and that's telling you where the markets are going, and they were very successful at it. And it was very interesting, back in those days. So anyhow, just a quick thing there, because this chart really is emphasizing it. It was roaring along. The poor product had gotten into the 20s. It was at all-time highs as like it, let's do it with the J4X. There's the J4X. There's the Euro Turkish Lira. Let's go to a monthly chart, and you'll see what I'm talking about here. There we go. So you can see here, the Turkish lira at one point was trading at 2. And then former Prime Minister, now President Erdogan, came into office, I think it was like around 2000. He became Prime Minister of the Parliament. I think it was like around 2009. Something like that. And back in those days, the Turkish lira was a very competitive product. It was part of the European Union, and applying for connections to it, they were temporary or pre-approved, and they had open trade and activity, and they followed good banking law. And then somewhere's around here, Mr. Aragon, if we go like this and then slide, can we slide that over? I think we can. And we go like that. And then somewhere's around 2000, this is, I've always said, this is like a financial laboratory. This is like, you're actually watching research live in a sense. These are monthly charts, and then uh, Prime Minister Aragon gets in power, and the product is hanging around the 107, the 108s, trading just like the way the euro does against the dollar, that type of thing. Nothing too exciting. And then his policies, being prime minister, and then he gets control. He becomes president, and here's like 2012 and so forth. He's president now. You can see the thing keeps on climbing. It's losing money against everything. Now it's at 4.8. It's going on and on. You see it spike up into the eights there in 2018. He's president and controlling the economy. It's his policies, and that's what you see here. And then you can see this action we've seen just recently in these last couple of months because of the sun's blast of protons and electrons, which create earthquakes. Boom. It plays with the plates on our planet. The different plates. It's not one big homogeneous ball. It's a combination of different parts. So, and people used to do technical analysis on that. They would actually do technical analysis, and they had newsletters, and they were very accurate. And then when the central bank got involved, the Federal Reserve took over in 2008. Right at the election of Mr. Obama, that turned it into a much in the beginning, people used to say that's it's not true. The Federal Reserve's not in there every day. Doc here was telling everybody it is. They said, man, you got to wear like tinfoil hat now. You're really losing it. And I'm saying no. I'm seeing abnormal supply and demand on my math. It's not natural. It's something's in other words, it's not working the way my math was working fine. It was picking up the distortion. And it was like emphasizing it. I'm like, you got to see this distortion. Look at this. This is crazy, But in the end result, that's how it played out. So when you look at the chart here, the sun throws these blasts at the Earth here. It hit Turkey and northern Syria, and then it did it again 2 weeks later. And you can see that the currency has backed off because enormous amounts of money are coming in from around the world to help out. Oh my, okay, yeah. Good old Biden. And let's see. I could say the same thing. Laugh at him. Joe Biden did something. He does something stupid almost every day, so that's not that much. There we go. So that's where we are right now with the Turkish lira, and these spikes here are from the illiquidity. That's what you see here is that illiquid action that we're getting. Because I understand that you go buy something in Turkey now. I understand that they're it's like trading on a floor. Trading at an exchange or something like that. I mean, the prices are fluctuating as you're standing in front of the vendor. That's wild. Totally wild. All right. Anyhow, from a little conversation about the sun, which is the center of our universe, our solar system itself, not the universe, the Milky Way that we live in, or Andromeda A, or however you want to look at it. But in the end result is that it has had an influence in that region of the world, because of the amount of CMEs hitting the Earth, and that's. There is actual technicians out there. Before quantitative easing, they would actually follow sunspots and so forth, and they were very accurate and very successful. Some of them, some of the best technicians of their time. They were very good. Now, the QE, quantitative easing, and the Federal Reserve and every central bank on the planet is flooding the world with capital. So. And they support the markets instead. All right. From there, we go over to the two currencies that follow. One follows oil pretty well. The other one follows gold. and that is the Canadian dollar against oil, and we watched the South African rand against gold. So let's tune into that and see what's going on. But that was a little conversation about the sun and the sun's activity today. And there used to be actual market technicians that were some of the best technicians in the marketplace, timing wise, because they followed sun activity. And when they saw like a CME, a corona mass ejection coming from the sun, the speed of light hits us within 8 minutes, because you're using the speed of light. That's the photon itself, and then you have to physically deliver the protons and the electrons, and that takes days to get here. Sometimes 2.5 to 3 days, depending on how fast it came exploding out. And you've seen that stuff before, or you see a picture of the sun and it blows up this big teardrop, and if it's aimed anywhere near the earth, we feel the effect. And that's why people used to say, oh, you're affected by the sun. And sipping my tea there. And so that's just a little conversation we haven't had in a long time around here. So it just happened to come out because Turkey's chart is reflecting it very clear. That peak is the blast that hit Turkey. I think there's 45, 50,000 dead from it at this point. And, from that peak right there. And same thing in northern Syria. And so the currency dropped down because of the foreign aid coming in. Like the first day, like a couple $1 billion of foreign aid came in. And so, you have, people are buying Turkish lira, which means this is going down when they're buying Turkish lira to, bring in aid and food and so forth. All right, just a little side note there. And let me just end it with this. There used to be market technicians. Some of the best market technicians for years were ones who followed the activity of the sun. And then you had the astrologers. I know that sounds funny when you talk about astrology, but what it was is that when you align certain planets in the solar system, you get, like earthquakes and corona mass ejections and so forth. You get things, you get solar activity. Let's put it that way. That's how it's described, solar activity, which influences the markets. And then we used to have market technicians that would, Lloyd Cope was a big one. Used to follow it. He's passed on. He's, was an older man. But there's a few out there. I think Merriweather right now is probably one of the more known ones. And he uses the sun and the activities of the electrons and protons, how they're hitting the Earth, have an effect on the psyche of the humans themselves. But quantitative easing has taken a lot of that away. They have. But you can see here today, we've just fallen into a conversation about it, because you can see here that the sun blasts out a big corona ejection, and it hits the Earth right here, and it peaks out the currency and it drops. So, and that used to be a big thing at one time. People used to follow that. All right. From there, let's go take a look at the Canadian right there, and you can see this sloping up action, and that means obviously it's losing against the dollar. And at the same time, that you take a look at energy products, you look at oil. Let's go find oil here. Where's it at? Right there. Where is the oil? And we'll find oil there for you. And so there's the oil contract. And usually when oil is going up, usually Canadian is going down. And when oil is going down, Canadian is going up. And you can see right from here, the last 3 days, let's go back to the Canadian. Let's put the Canadian up over here instead, just so you can see them on both. And then there's the CAD against the dollar. Come on, what's going on here? Why can't I? Let's make it the whole screen for a second. Okay, there we are. Okay, so you go like that. And so then let's go so you can see both. There we go. I see, there must be a button here that tightens it up. Where's my tightening button? There must be a tightening button. Usually the mouse does it with no problem. I'm having problems here. Let's put it into, well, I don't want to put it into a weekly perspective. I What's that mean? Plus crosshair, no. Let's do this for a second. Maybe this, if I move this over. We can do, let's see if I go like this. If I go like that and bring it over like that, and then we go like that. Oh, there we go. Okay. All right, so you can see here the actual, not with the hinky ASCII bars, but you can see the bottoming of it here. At the same time, this is the oil market, and the oil market usually when the Canadian is going up, the oil market is going down. You know, and it has a downwardly slope, but it's a triangle. Notice that? But it is downwardly sloping. And so in this case here, the last, you know, you can see here it was going down, 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 and then lifted up, and then fell back down right there, but it was bottoming here. So these last 3 days, you've been seeing that it's been really lifting and breaking out of its small range here. And at the same time, that is crude. Now here's the Canadian itself. And as oil goes up, normally Canadian goes down. Okay, that's normally the way. About 70% of the time, it's correlated very well. Now, whereas gold and the South African rand used to be 99% until this political problem started to occur in the South African rand. Let's jump over to that now. So there's the South African rand right there. And so, you know, it's been climbing, and in the metals complex works in the opposite direction. Right there, there's the gold. And gold has been going, as this is climbing. So in other words, the rand loses value against the dollar as gold goes down. That's how it works. And so, you know, both of those are influenced by the commodities, you know, or vice versa. The commodities influence their currency. Now, the Canadian is not as influenced. It's only about 70 plus percent of the time, maybe 80% of the time, 65%, bounces back and forth. It's not that consistent, but consistent enough. Whereas gold and the South African rand is like lockstep until the president of South Africa got in trouble. And that was right here. Let's put this up on the whole screen there. And what happened was right here, we have it on, let's do it on here too. We have it on here. Where is it at? Right there and there. Okay. And so let's tighten this up and you'll be able to see it. And we have it written on the charts right there. What happened was that they, for whatever reason, that, you know, I guess the national police or something, they came into his office, his private office, in the Capitol, and it's like the police going into the White House, and they found $520,000 in the sofa. He was hiding money, and so he went under corruption charges. They thought he was going to have to resign these 2 days, but then he said, "No, I'm not resigning." And then no one forced him. So then you see this big distortion where gold is rallying from it, but the currency is not moving, whereas normally the currency moves. Now you can see here it's kind of gotten back into the groove. The currency is losing value against the dollar overall. You can see last day or two it's trying to, it's gone into the sell there. Move that over like that. But gold, when you look at gold over here, let's put it up on this. Right there, that's gold. So you can see gold has been dropping, and this has been rising. That's how that works. And they work pretty well in lockstep until this particular, you can see this crazy going on here. Whereas gold was rising, and normally that would mean that the South African rand would have been down to around 14 and a half, not 17. It got locked in this area because of the political turmoil from it all. So that's the, and it's, just your classic mechanics of it all in the end. So, it normally is like 99%. If we saw weakness in the South African rand and gold was up for the day, I would say in our webinars, you would hear me say it before this. When was that? That was December, right there, when it happened. It would be normal. You would see you would see if the South African rand was rising, gold would drop by the end of the trading day here in the States. It would just do it all the time perfectly. It would follow it very well. But now it got this whole big distortion here, and that's why I have this here, politics, $500,000 in cash. And it's been distorted, whereas the action in gold from that same time period, and that is right there of December 1st, when you go look at December 1st, you can see gold was rising. And normally this would have broken down. So instead it broke down from here, from the 18s, and fell to about 16 and a half. Where normally it would have been from 17, it would have been down to 14 and a half. 17, just double check. 18 to 16 and a half is 1.5. So normally it would have gone from 17 down to 15 and a half, down to possibly even 15. And so that's why these lines are here, for the distortion of it. And it's just the way it rolls, you know. So now it seems to have gotten back into the rhythm, and now you can see. Let's see if we can show this. Let's put it up on J4X. Let's look at the South African rand right there, and when you look at it, you can see here it's up here touching this range here, and gold is not doing the same thing. When you look at the metals complex itself, where's it at? When we put gold up on there, you can see that it's not in the same rhythm. It's in the same rhythm on some part, but you can see here was the distortion. It should have traded down to about here, and it didn't. The politics had it all chewed up and confused right there. So when it based at a higher point. So last time the South African rand was here, it was trading at, when it was trading at 18 and change, what is that, November, October, and we go over here and look at, let's put the gold in there. And when we look at the same thing there, let's see if we can contract this. You can see that it was down in the 16s, but here it's bottomed in the 18s. So it's a total distortion from the same time period that was working lockstep for a long time. We saw gold and South African rand work perfectly with each other, the currency and the metals. So anyhow, that's boy, it's a tinfoil day, isn't it? We're having conversations about things that people just don't talk about anymore. But the facts are the facts. When you look at the charts, they match. That's the problem. It's as crazy as it all sounds. When you look at the charts and you look at the facts from the sun and everything else that's going on in the sky, it all matches up. And there used to be technicians. There were technicians that would follow this stuff. They'd watch the corona ejections and the CMEs, the corona mass ejections and so forth, and they would follow these things and trade the markets off of it. And they were relatively successful. Some of the best technicians were really great until quantitative easing came along. So the Federal Reserve took over everything. Another sip of the tea there. So, just a fun fact at this point, because we live in that world now. You hear about it all the time. Quantitative tightening, quantitative easing, QT, QE. People don't even probably pay attention to what it's all about anymore. Matter of fact, I've seen stats that show that a third of professional traders, in other words, works for Goldman Sachs or Deutsche Bank or, I don't know, Barclays or, JP Morgan Chase here, a third of the traders don't know anything but quantitative easing. They their whole life, in professional life, they're in their 30s, and they don't know anything about. When this all started, they were in high school. They were, 17 years old, 15 years old. They weren't watching the market so closely to know. So it's an interesting thing. And there used to be technicians, market technicians, that used to follow the activity of the sun, how much it influences activity on Earth all the time, not counting, lightning and rain and, all these other things, clouds, but, actual financial activity. So anyhow, that is that. And Turkey just happens to be the catalyst for this conversation today, because it got hit by two separate earthquakes. And earthquakes come from the sun. That's it. All right. Let's see. What else we got going on here? I guess from there, we just take a look at the Mexican peso. Not there, that's for sure. Let's see. Let's go to here and see what the peso is up to. Right there. And look at that. It's just driving down. We're in that weekly sell from this area here. And you can see both the fast and moving algorithms of ours moving with it. Excuse me there from the McT. And that's the activity that we've been seeing here. So, all right. I guess it's a quiet day. And so it's past, I don't think there was any, let's see, continued jobless claims came out. Okay, 1.65 versus 166. And the Dow is up a little bit. And let's take a look at the stock indice, and then we're going to get out of here. So there is you can see that we're heading for, are we heading for the lows of the day? No. No, what is that? That is the British pound. So let's go to the stock indice. Yeah, right there. That's not the British pound. That is, oh yes, that's the British pound. So the pound is selling off from it. You can see the work from that. And then when we go over to the stock indices themselves, right here, and there is, right there, you can see it's going after the lows of the day again, or close to it. I guess, I thought 23 was a low. There it is. And then we can go into our longer term, right there. You can see there's the lows from last night. And then you can see here that Europe opened up and the product moved up. And now the news has pushed it back down again with a low today of, what is that? That's 3,925, it looks like, yeah. And now we are at 34, so we're 9 points off, but you can see our algorithm is breaking down here right there. And so we got, oh, it's going to change in a few seconds, so we'll wait. There's 422 ticks away, I guess you could say. There's 350. You see where I have that right there. So you can see that right there. And it's going to jump to 18,000 in a few seconds here when it comes to the count. There's 100, there's 94, there's 37, there's 5, there's 3, there's 18,000 again. And so now see our algorithm is breaking down. And I guess, they're going to go threaten this low in here at this point. Especially if this closes. So we have, now you can see it's moving pretty fast. 17,800 already. And it's ticking down now. It's 17,700 and change, and it's marching its way south. And you can see this product breaking down. And when we go to a much more shorter term of the S&P 500, you can see it broke down here from the news. I guess the news was right. Let's see where the news was. That was the news right there. Right there. And you can see it's breaking down. It tries to do a little bounce. You can see it tries to turn up. Our math turns up for a few bars, and now we're back into the saddle again, heading south. So, this is Doc from North America. Catch you all. Today is Thursday, so tomorrow is TGIF. Thank goodness it's going to be Friday. So, happy trails to you. Until we meet again, I will have my tinfoil on my head. Happy trails to you, to all our trading friends. Later, traders. Catch you tomorrow. Same time, same channel.